Ritu, afternoon. Thanks for joining us live on the show. First up, your call on the markets in the near term because, what many touted as a possible booster package for the economy turned out to be a bit of a damp squib from the government. So there aren't too many triggers to watch out for.
I agree completely with you. I don't see too many triggers to watch out for on the horizon. So for me, the market, the view remains unchanged as a range-bound market for the next couple of months with a downward bias because there are a lot of challenges out there in India as well as in the global economy which is very real and continue to bother us. At the same time, hardly any positive triggers. If anything, I would be excited about a trigger on the policy action side or pick up an investment capex cycle. And both look a little difficult in immediate future. Of course, reforms can trigger the second. But otherwise, a bearish bias and a range-bound market. We have been making lower highs with every upside that we've made. And I think that'll remain the order of the day.
Ritu, in the near term, does it seem like tackling the currency weakness is the key issue which perhaps could, provide some near-term fillip to the equity market?
Undoubtedly it is to our advantage as Indians. Commodity prices have corrected, crude has corrected more importantly, which gives us support on the fiscal side. But currency has eaten away most of those gains and currency continues to be under stress. Current account deficit numbers are still not very encouraging. So currency stabilizing with some policy actions and support from RBI would definitely be a very big positive for India. Because then we start reaping in the benefits of other positives that have already happened, like commodity prices.
Also, are you hopeful that once the presidential elections are over, we could see some action on the policy front as well? Do you think there's a possibility now that the Prime Minister will take charge of the finance portfolio? Could that give a bit of an impetus to reforms?
I would think today is as good a time as yesterday was, and so will be tomorrow. And I'm sure everybody, including Prime Minister, recognizes that policy is something that the country is looking forward to. So yes, I would be hopeful and I would have my fingers crossed.
Ritu, so what is it that you're liking among sectors? Is there some opportunity which is looking good considering the valuations it's currently quoting at?
In an environment like this, as I've been discussing with you, more in sector, it becomes stocks that one needs to focus on. One needs to be very focused on a high earning potential that stocks have. There would be some sectors which are more promising relatively than others, and those to me at this point seem like pharmaceutical, IT, private sector banks, to some extent auto. And of course FMCG is expensive but an important hold in today's environment. But other than that, I would, even within these sectors, focus on earnings growth and potential for earnings growth, strong balance sheets, cash flows, brand names, franchisees. Because when the going gets tough is when everything gets tested, and one needs to be definitely in quality and liquidity both.
So you're saying the investors should focus largely on the large cap universe within sectors like FMCG, pharma, and not venture too much into the mid cap space?
I definitely prefer a large cap at this point in time. As I mentioned, liquidity is important and also the sturdiness of the balance sheet, which is relatively, to say, put it a little loosely, more in large caps than mid caps. But mid caps which have these trends and have good earnings potential should be entered into. In fact, if one has a 2 to 3 years horizon, it's a very good time to even start picking up cap good stocks. But there may be a couple of quarters of pain ahead. But otherwise, quality and liquidity to me is what is the real demand of the day.
So what is it that you like out of the cap goods space, Ritu?
No stock specific recommendation, but like I said, it is only for the patient that one would get into a cap good investment. It is an investment which can wait. So if one has a fair amount of cash, one would enter into that. But otherwise, for the next few months and quarters, as I said, I see volatility and one would want to be in defensives, pharmas, FMCG, and no specific stock to recommend in cap good. But again, go by the size of the venture and cash flow strength.
What about the IT pack, Ritu? Would you like some of the large cap IT names like a TCS, a Wipro, and Infosys?
Definitely, I do like IT. I should have mentioned it earlier. In this environment of depreciating rupee, needless to say, IT looks attractive. Also, they're relatively buffered from other concerns that are looming large, like monsoons failing, etc. Only inflation that's facing them is wage inflation, which many of them have managed to control well. Outer outlook looks a little concerning, but it's not very worrying at this stage. So IT relatively looks a buffered sector at this point in time, and big players there, as well as some mid-sized players, they are well placed and definitely worth holding in the portfolio.
Ritu, you were just talking about as to how you're expecting a range-bound market, and it has been making lower highs each time with every expiry as well as every trading week. What's the base case assumption for the index? Do you think 4,800 and we have a strong base at that?
There's always, as we've seen over the last 2 years almost, there has been a fair bit of downside support that the market has. Today we are at 13 times forward FY13 and 12 times FY14, which is very much near the lower ends that the market touches at. So to that extent there is support. What worries me is the more of no upside triggers being visible in the horizon, and hence 10-15% from here looks very plausible to me downside. Upside triggers are fewer, and that's where I've been on your show many a times, and still it's been range-bound market with a negative bias. I don't see those triggers on upside, but 10% downside very possible.